Hey everyone, welcome back. It's Rob Brayton again with Perfect Spiral Capital. We're back with our Nelson's Principles series where we're walking through the 6 different principles that Nelson Nash laid out in his book, Becoming Your Own Banker. And today we are in principle number 4, and that is don't do business with banks. I think the biggest item that a lot of people probably take from this particular principle is they kind of take it at face value, right? Where they assume that it means you don't do any business with any bank whatsoever. And Nelson wasn't talking about so much the act of transacting money, checking savings, that sort of thing. What he was really talking about was third-party financing. By that third-party financing, what he was talking about was removing the control that lenders have over our lives. Let's think about a simple car loan. So when you go to a bank and you purchase a car and you're going to take that loan on that vehicle, do you really own the vehicle? It's a fair question. And the reason I say that is if you look at your title, what does it say on that title if you have a loan through a third-party institution? Well, if you look at it closely, it shows that there's a lien on that title of that vehicle, meaning that the bank has first right to that vehicle should something happen to it, assuming it's insured. It also has first position if you were to sell it, meaning that they have entitlement to the first proceeds of that sale. In addition to that, there's a number of rules that we have to follow. They determine what interest rate you pay and or you qualify for. They determine what your payments are going to be like, and they determine how long you can finance the vehicle for. This is particularly the case for younger individuals out there who are perhaps trying to borrow against an older vehicle because it's their first car. Well, guess what? The challenge is, and I face this myself, your term and your payments may not be easy to accommodate. That being said, if we remove and or could we remove the bank as the primary source of lending, we then get to change or begin to make the rules. In addition to the payments and the interest and the length of the term, the bank's also determining whether or not what happens in the event that you can't pay. How flexible are they in the event that you lose a job and you're not able to pay? A lot of times they're not very flexible on that front, right? Lastly, the other area is that they tell you exactly how much and what type of insurance you have to put on that vehicle. You also are beholden to those rules as it pertains to the financing aspect of your vehicle. And they're going to do that no matter what you may or may not think is the right level of insurance to carry for your vehicle, regardless of your other financial positions. Now, let's take the stance as we do here in practicing the infinite banking concept where you are the person financing the vehicle. Well, first and foremost, there's no lien position. When you take out a policy loan and you purchase a vehicle, you own that vehicle. That title is free and clear. There is no situation where the bank has any level of involvement into that particular car. It becomes your asset, albeit it's a depreciating asset, it becomes yours. If we think back to the last principle of don't steal the peas, one of the important things that we have to think about is you control the payments. You determine when and how that loan gets repaid, and with how much interest you decide to want to put back into the system as well. What works best for your particular financial situation? Do you make payments monthly, quarterly, annually? All of those options become yours when you remove the third-party lender out of your situation. Another really interesting aspect in this particular situation too is what happens when you can't pay, or if you can't pay for some reason? Well, nothing really, because as we just talked about, there is no lien position. You do own this vehicle outright. There is no problem. What happens if you lose a job for 3 months? Well, because you are the lender, because you control the situation, you can forego those payments for a number of months until you're ready to start that repayment schedule again. In reality, though, because you are the banker, you get to determine how it gets repaid, when it gets repaid. There are certain situations where maybe you want to forego those payments for a year. Now, I'm not advising that that's necessarily what a person does, but you are the banker, you have the control. So this is why in this particular situation, and why Nelson is really stressing to not do business with banks, not only are you in this particular scenario taking more control over your financial situation in your future, but it's going to tie into one other item that I want to talk about a little bit later on. So staying on the topic of the automobile as our example here, you also determine what level of insurance coverage you get to take or want to take on that vehicle. If you're fine with self-insuring for everything beyond liability, you can feel free to do so. You have the capacity, you have the ability to do that in this particular situation. Now, maybe you don't want to do that. Maybe you still want to pay full coverage. Again, that option is completely yours. And that's the advantage that you have in financing a vehicle on your own through your own bank. In our second to last point here, I think it's important to think about, and that getting rid of the third-party lenders in our lives takes time. Yes, we're using the example of a car, but what about mortgages? What about the bigger things in our life? Well, it takes time. As Nelson said in the book, he clearly talked about that it took him almost 14 years to fully get rid of the snakes and dragons, if you will, in his life. It takes time. Everyone's situation is a little different. It's going to take time to capitalize the system to be able to accommodate those larger purchases. I can say, even from personal experience, as well as other clients that I have, it does take a little bit of time. However, it grows, and it grows pretty quickly, a lot faster than you would maybe think when you start to adopt and really apply the concept, especially when you think about it from the aspect of these principles that we're talking about in this series of videos. The less we can rely on the third-party banking institutions, the more financially free we are going to find ourselves, and the more financially and fully independent we are going to become. So that takes me to the last point of why this becomes really important and why not to do business with banks. When we think about the fractional reserve banking system, and I know not everyone's going to be familiar with that, but I'd really challenge you to go do some research there. The money that banks are generating when they generate loans are not coming from someone else's deposits. Because there is virtually no reserve requirement for banks, they're creating that money out of thin air. So every time a loan is taken out at a bank, it's actually continuing to enhance the level of inflation that exists within our financial system. It actually devalues each dollar that you have to use in the future. When we think about infinite banking, this is a 100% reserve system. While we use the currency, it's operating outside of those realms. And when we finance our own vehicles, we're not contributing to the problem. As Carlos Lara has laid out, one of the things that we want to try to get to is reaching the tipping point of the 10%. And what that means is if 10% of everyone in the United States were to adopt infinite banking as an example, in the way that Nelson is talking about in his book, it would actually cause the ability to have critical change take place. Because there would be enough momentum from a strong and useful minority, there's lots of broad-scale economic impact that could actually create and do. As we wrap up here today, I think it's important that we understand the importance of not doing business with banks. Again, this isn't about your checking and savings accounts. This is about the fractional reserve system. This is about third-party lending. When you can reharness and take control of that function, it provides freedom, it provides flexibility, it provides guarantees, it provides ultimate freedom for your family and for you financially. That being said, take a look at it. Get the book. Get Becoming Your Own Banker. Read it. Seek to understand it and see if it's something that's worth implementing in your life. Get in touch with us. We'd love to talk to you. We'd love to help you on your personal journey and help you take control of your personal situation. I hope you found this video valuable today. Please feel free to like and subscribe. Feel free to comment. We'd love to hear from you. And we'd love to hear about future topics you'd want us to talk about. Thanks again for your time today, and have a wonderful day.